I'm Caroline Hanratty, real estate partner at Mills Reeve, and I'm talking to Ed Ellerington. Ed is the founder and managing director of Package Living, a bespoke build-to-rent developer and operator. Following success with its multifamily apartment-led platform, last year, Package Living launched its suburban single-family housing rental platform. So Ed, perhaps we could start by you explaining the single-family platform and how it works.
Thanks, Caroline. We set up single family, as you said, last year. And we see it very similar to what we're doing in multifamily. This is about building really good rental communities where people want to live and where they have safe, secure homes for as long as they want them. And so the only real difference between those two businesses is multifamily is building apartments, and effectively there we develop out the entire scheme. So we buy land, we build, and effectively we then operate. And within single family, what we're doing is we're partnering with house builders across the UK, so mainly large nationals, and we're forward funding them to deliver houses, which we then operate in the long term. But the general kind of consensus of what that product looks like is very similar at the end, and the communities we manage are very similar.
Great. And so what would you say is the appeal to an investor for this product?
Yeah, it's an interesting one because it's probably been the slightly underloved element of kind of the rental market. It's certainly becoming much more seen as the product that institutions want to get involved in, and that's for a number of reasons. And one of the build to rent sector in itself is highly attractive. And I think when you look at single family, what's happened over the last 10 years as build to rents kind of happened and started to grow up is that the people that are living in our homes have also kind of grown up. So you've kind of, they've got a little bit more kind of married, they've had more children. And so those people we were providing housing to who are in their kind of early 20s and apartments in their early 20s have all decided, as you do, to grow up. And so the largest kind of expanding piece of the build to rent market is now actually that kind of 35 to 44-year-olds. Mm-hmm. That now accounts for about 30% of the market. So the institutions out there are starting to see that they need to move on to housing as a natural kind of next product. And along with that comes many quite attractive things for institutions. So firstly, by building houses, you are much shorter in your speed to income, because effectively once you've built a house, it can be let, as opposed to apartments where you're building, say, 300 apartments, you need to complete the building before you can let any. So that speed to income, which is so important for institutional money, is there. Secondly is liquidity. So again, we've all got a lot more comfortable over the last 10 years about the ability that actually you're buying a community, you're there for the income and you're there for the rent. You're not necessarily looking to break these apartments up. But those parties that are coming into the market, you still have some concerns around liquidity, and that's becoming less and less so. Housing offers that ability to break up because you can sell individual houses very easily and within one of the estates that we build. And then the third, I think, probably big piece around why it's attractive is just purely around the kind of operational efficiency and actually the cost of managing housing. And because you don't have kind of complicated lift shafts, you don't have numerous cores, you don't have all the things that come, you have very complicated ways to wash 24-story windows. The overall running costs of housing is much cheaper, and they're much more efficient. So actually that's quite an attractive thing for an investor to understand. We all understand how a house works. We might not all understand how large apartment blocks work. So that's the third kind of key reason in what is a growing wider market demographic.
Great. And so are there any particular hotspots around the country where you're finding there's demand for this product?
Yeah, so on the apartment side, we're in the 23 largest towns and cities in the UK. Whereas the beauty of suburban housing, and this is suburban and fringe urban housing, is it goes kind of anywhere. So where house builders are building houses to sell, then we will take houses to rent. And what are the key things we're looking for? It's good access to schools, it's good access to transport links, and it's fitting our kind of housing schemes into really good communities that already are there. So we're not necessarily kind of creating gated communities and trying to kind of manage within our own site. What we're actually doing is finding good locations where we can then build around that and bring the people back into areas that work. So there's no specific area. We're nationwide. We run right up to kind of almost the Scottish borders at the moment. We are looking at schemes in Scotland, right down at the moment to things on the south coast. We've got a scheme in Wales, and we're looking right across over at the moment into Lincolnshire as well. So we really do cover the breadth of the country. The product is generally 2 and 3 bed houses. So we find that's, it's usually either 2 sharers, and in a lot of cases that's 2 teachers, it might be 2 nurses. So we're looking things like that kind of employment side. Hospitals are a great local employer, and then we're looking into smaller kind of early stage families, and that kind of works for house builders because they find the higher efficiency and the better value product they're building are kind of 3s and 4 beds. So we sit quite well and partner quite well with a house builder naturally as a product.
That's great. Thanks so much, Ed. Thank you.
Thank you.